This video is being recorded at 11 p.m. Pacific time on Tuesday, August 9th. So let me go over a trade that I took about 24 hours ago. This was on the pound Swiss franc. I sold this one yesterday on a potential breakout just before and right after the London session open. So the exact positions were 7 lots for the first position entry. That was at 11:20 p.m. Pacific time at a price of 1.1527. And the second entry, I'll go into the details more in just a moment, but I took it at 12:17 a.m. At 1.1516. So let me show you the chart of pound Swiss franc, how it was behaving. Okay, so the setup for this week looks like pound Swiss franc could break down. So here is the weekly chart. I was looking for it to break past the 1.1524 level support, and for the last 3 weeks there have been candles with wicks pointing upwards, showing that the sellers are willing to sell through this area and hopefully push it through the support. So yesterday's candle was a bearish candle, but it did not break all the way through. So let me show you the exact timing of the attempts that I took. Okay, so here is the 4-hour chart. You can see currently it is making another attempt at breaking out, and it looks more likely this time. But the exact candle I took yesterday was this one with one long pin bar going down, and then it came back. It got bought back during the London session, and then I exited my positions just around then. So let me show you the 1-hour chart that I took the trade in. So it was, just at the London Open. So you can see there was this 1-hour bearish candle that happened at the end of the Tokyo session, and it looked like it was going to break past this support area. It did end up going down in the next 1-hour candle, but it got retraced back up, and then retraced all the way to the pre-breakout area levels. So yeah, this pair has been quite volatile recently. Let me see the 5-minute time frame of when I took the trade exactly. Okay, I still have the markings here for my exact entry and stop loss positions. So to zoom in a bit more, and I even used the replay to hide the extra candles. Okay, so my first entry was on this 5-minute candle. It broke right past the previous low, and I sold somewhere in this candle, and here's the exact entry marked by this first green line. It was at 1.1527. So I sold here, kept holding for a few minutes. I saw the buyers were willing to defend this price area in the 5-minute time frame for a while. My stop loss for the initial sell position was all the way here past the previous high at 1.1559. So that's about 30 pips of stop loss I was taking. So I was seeing that the sellers were winning in this hour or so of market action. You can see the lows are getting lower and the highs are about at the same level, but slowly getting lower as well. And then at 12:10 was the breakout. So let me talk a little bit about the risk management I took on this trade. So this was the last day of the FTMO challenge. Before taking this trade, the account was at just about $203,000. So if you're familiar with the terms of the FTMO stage 1 of the challenge, as long as you don't break any of the other rules and you keep your account balance above the starting balance, you will get a free repeat. So it doesn't matter. I start at the 200,000 level, but it doesn't matter if I had 200,000 and 1 penny. I would still be allowed to repeat, as I didn't break any of the other restrictions during the challenge. So I had just under $3,000 to play with on this last trading day, and I figured I'd risk about 1% of the account on this trade. So figuring that 30 pips was exactly 1%, about 2,000 or so. So I was prepared to risk that amount, even if it retraced all the way. It would just be a free attempt to get to the 5% profit target for me and hopefully get a 14-day extension. So I sold it here, took 1% risk. It went all the way down in my favor. So that was when I was considering if I should take another 1% risk. If I was trading outside of the challenge, I would have put on a 2% risk trade to begin with. But now that the price has proved to go in my direction, I have a bit more wiggle room in terms of risk and pips to play with. So I chose to take another sell after this breakout candle here at 12:10 a.m. I thought it was continuously breaking down, and if you recall from the weekly chart, breakdown at this level would be quite significant. It could run for several hundreds of pips, as there's no clear support past this level, and yeah, it should be about like maybe 400 pips to the previous wick low. Yeah, 400 to maybe 260. So being that this was the last day of the challenge and I had extra funds to risk, I thought I would just put on the rest of the amount to see if it would go in my direction. But now we can see it did not, and it actually turned out to be a fake out, and the price retraced all the way back. But the exact thinking here was that I moved my initial stop loss down to the previous high here. So I was only risking maybe 8 pips from my entry 1 position level. And then you can see here I marked the exact entry price for my second sell order. It was 1.1516. So measuring the same pips from this entry level to my proposed stop loss, it would have been, call it about 19 pips. So 8 pips of risk from my previous entry level and 19 pips from my second sell level was about equivalent to the original 30 pips of risk I was willing to take. So even if the price retraced all the way and both my positions exited right here at 1.1535, I would have still been fine to qualify for a free reattempt at the challenge. So I thought, why not take a chance here anyway? This may not be exactly how I would trade outside the challenge, but being as there's specific rules to the challenge, it's there's a certain gaminess in itself. I might talk about that in a future separate video, but this is the trade I ended up taking, and as you can see right here by the 12:20 a.m. candle on the 5-minute chart, formed a doji. The next 2 bars, the bulls pushed it back sharply to about this, we'll call it an indecisive territory, where the 5-minute sellers and buyers were not sure where the price was going. And then I thought, well, if the price goes back above one of these wick highs, call it 1.1533, then I would just exit both positions and give up on this trade. So I think I was actually checking the 2-minute time frame, but basically if you see from the 5-minute candles here. It was forming an ascending wedge, but slowly it was breaking past the initial impulse high, and then I think I exited on this one candle where you can see a wick just exceeded the previous high, and then I took my second position exit at the next wick, which closed even higher. So it looked like that was the right decision as the price continued to retrace all the way throughout the London session. And let me turn off the replay so you can see how the rest of the day unfolded. So yeah, I'll show the 30-minute chart, so there's some detail in this. Basically, throughout the London session, it retraced all the way. It was volatile for a little bit going to the New York session, but not a complete breakout within the last 24 hours. Even as New York closed, this 1400 candle was very volatile at the Sydney Open. And the market remains indecisive. It still has not broken through cleanly yet. Although it looks like in the last hour, the sellers in this market are making another attempt at breaking the low. So maybe when the London session opens in about half an hour, we could see enough volume to break through. But yeah, if you're trading the Swiss franc pairs, keep in mind there is a lot of volatility in the Swiss franc pairs. You can see even on the daily charts, there's a lot of candles with wicks. There's not very clean breakthroughs. Most of these are volatile in the lower time frames. So if you're setting a stop loss or a take profit, just keep that in mind. But overall, on this pair, it still looks like it has a good chance of breaking down this week. We can see this week so far into Tuesday's close. It has been a full-bodied bearish candle, whereas the previous ones, there were many wicks. But yeah, the long term, it looks like this pair is still likely to break the support here and keep going down. And here's also yesterday's currency strength chart, if you use that as a reference. So let's just look at the pound. You can see a lot of the volatility contributed was from the pound alone. Here was the breakout, which I attempted to sell around midnight my time. So it went all the way down before shooting back up here, and then there was volatility, and then by the morning it came all the way back down again, and since then the buyers have not been able to push it up. Let's see how it looks compared with Swiss franc. Swiss franc is actually more stable. It has been going up in a stable trend. So you can see here exactly when the pound was weak, the Swiss franc was approaching its top peak strength, and then as pound recovered, Swiss franc got a little bit weaker, which would illustrate how this pair retraced a bit, and then throughout this day, Swiss franc has regained strength, whereas pound has lost its previous strength. And if you merge these two pictures together, you will get approximately the shape of how this pair has been trading in the last 24 hours. Okay, so my FTMO first attempt has come to a conclusion. I did not pass. I am not eligible for a 14-day extension. However, I am eligible for a free repeat to restart at 200,000 and reattempt all the trading objectives. So I may take a short break before resuming the next attempt. So far this week, there are some possible good setups, but they don't look the best. So I may just take the rest of this week off and check the charts and see if there's some better setups in the next weeks coming up.